right, so this video is on why retail traders lose and will continue to lose unless they have the paradigm shift. All right, so retail traders, the statistics are dismal. Why do 90% of retail traders lose? Well, over the years, we've identified the reasons why. Most are trading inaccurate information. They're using indicators instead of price action. All right. And most are trading from the right side of the brain, not the left side, which is the analytical side. The right side is the emotional side, and it also has the belief component in it. I think it's going up, man. I think it's going down. All right. Oh no, it's going against me. The broker's going to take me out. That's all right side brain stuff, right? Most have stacked the deck against them, and they don't even know it. So we're going to look at each of these components and, most importantly, find a way to solve them. All right. So this is a friend of mine. I traveled with Greg Michalowski for 3 years, and he was a bank trader in London for 12 years. And this is his chart. So what has he got on it? A set of moving averages and a Fibonacci retracement. That's it, folks. That's all he's got on it, all right? Because bankers don't trade indicators. Bankers trade price action. And when traders are relying on indicators, indicators are at best 50% correct, okay? But indicators do not tell you what the currency is going to do. Everybody thinks an indicator is a little crystal ball that says this is what it's going to do. Indicators, with the exception of the MACD, are all lagging. In other words, they only tell you what the currency has done. All right. Well, you can look at a chart and you can see what the currency has done. All right. But what indicators do is gives you a false degree of hope. So, all right. So don't be an indicator junkie. All right. So, all right. Let's talk about left brain versus right brain. Right brain has emotion in it. Oh, no. It's going against me. The broker's going to stop me out. Belief. I think it's going up, man. I think it's going down. That's right brain stuff. The left brain, however, has logic, analysis, organization and administration, math and science, knowledge and facts, and detail. All right. So this is the actual trader, the left brain. All right. Now here's the unfortunate thing. The left brain has to be taught to trade. The right brain comes through emotion easily, looks at a chart and says, I think it's going up. It's real quick. But the left brain digs deeper, and it has to be taught to trade. Each and every facet of the Forex must be learned by the left brain until it is a master of it, or what we call reticular cognition. Reticular means I see it. Cognition means I understand it. All right. So let's look at the cycle of emotions. Okay. So traders or retail traders are going, okay, man, I think it's going up. Yeah, I think it's looking good, man. I just need a little bit more confirmation. Okay, I got it. Yeah, I'm in. It's the greatest trade in the world. Now, you're right here. You're overconfident, all right? Successful traders recognize this as the point of maximum financial risk. And what did the retail trader do? He just entered, or she just entered. Then the currency goes against you. Right brain goes on, oh no, denial. Oh, why did I do this? No way, oh my gosh, and stopped out again. The broker stopped me out again. Now, successful traders recognize that this is the point of maximum financial opportunity, and they are entering here. All right, hope, relief, optimism, maybe it's going to go. I'm going to get in again. And of course, it cycles back against you one more time. All right. So this is an emotional roller coaster that traders are on if they're on the right side of the brain. All right. Now, the left side of the brain has to deal with all this stuff and figure it out. When is the right time to buy? When is the right time to sell? All that sort of stuff. All right. So what we have to have is the paradigm shift. What is a paradigm shift? It's an important change that happens when the usual way of thinking about or doing something is replaced by a new and different way. This is a little spreadsheet that we developed to prove the point and to show you how the math doesn't work for you unless you embrace the paradigm shift. So as you can see here, I've got 30 pip
stops. Okay. Now, if you put a 30 pip stop on every trade, you're going to get stopped out. It's on average a 30 pip stop for a retail trader because we're stopping the 10-minute chart. All right. So this trade may be 26 pips, the next one might be 41, the next one might be 37, the next one might be 32, but around 30 pips. All right. Now, when I was with FXDD, one of the things I asked them one day in the pits, I said, hey guys, what's the average retail trader make on a winning trade? And they told me it was 5 to 8 pips. All right. Now, with 30 pip stops and 5 pip wins, you've got to be right 90% of the time in order to show a positive account, because your losses will overcome your wins. All right. So you have to trade at 90%. 9 out of 10 trades got to be winners when you trade at that level. In order to trade at 90%, you have to be the greatest trader on the planet. So you have to ask yourself, am I the greatest trader on the planet? And if the answer is no, then you can't do it. So let's change the numbers. Let's change it to do a 1-to-1 risk to reward ratio. We're going to risk 30 pips to make 30 pips. All right. And now you can quickly see that if I made 100 trades, all right, you know, everything being equal, which it's not, but there you go, that if I had a 50% skill level, I would break even. So I need to, if I just traded at 51%, I could have an increase in my margin account. But we're never looking for 30 pips. All right. Now we won't even touch a trade like that. We're always looking for a minimum of 55. So let's change this to 55 and see what happens. All right. Now at 55 pips, all right, I now only got to be right 40%. I can lose 60% of my trades and still show an increase in my account. And look what happens when I increase my skill level. Let's just say I increase my skill level from 40% to 50%. See what happens down here? I go to $125 in my account versus 40. That's a 300% increase in my margin account. All right. So I got to have the paradigm shift, which means I have to do it. I have to change what I'm doing, because to continue doing what I'm doing is a definition of insanity. It will not work. So Forex Broker did a trading contest. Right at the end of it, they had a winner, and then at the end of it, they analyzed all the people who took part of the contest. So they looked at all the accounts that lost money in it, and it's found that they were right 64% of the time. In other words, they had a pretty good winning percentage, but they all lost money. And the reason they lost money is because their average pip capture was only 5.74 pips. Then they analyzed all the winning accounts, right? And they took a look at them, and they found out that they were slightly better at finding a winning trade, but that's not what made them successful. What made them successful was that their average pip capture was 36.49. The numbers don't lie. You have to embrace the paradigm shift, which means you got to throw your indicators out, cut the umbilical cord to them, and you've got to work on your skill level. All right. So the skill level that you got to get to is 65%. I don't have to be the best trader on the planet. And if I stack the deck in my favor, and I always go for 55 pips or more, I only have to be 40% right. So what we want to do is we want to stack the deck where we don't have to be the greatest trader on the planet. And then we got to work on our skill level, which means we have to work on being able to gather the correct information to make the right business decisions each day. All right. So how do I do that? Okay. Well, first of all, you only trade with a 1-lot micro. A 1-lot micro on all positions, no more than that, until you get your skill level to 65% and your average pitch capture is 35 or more. You have to do it that way. Once I do that and I can consistently do it, then I can increase my lot size. I can increase my margin account size. I can do all that once I do it. But if I try to do it because I'm just going to be good, you won't be good. You can't. All right. And you have to embrace this paradigm shift. And if you don't embrace the paradigm shift, the numbers will not work for you. They just don't work. All right. So you have to do it.